Southeast Asia represents a massive market spanning 8 countries and over 900 cities. It is also a logistical labyrinth. A standard tech platform designed for the grid systems of the West breaks down quickly when forced to navigate its fragmented, hyperdense infrastructure. This document is Grab's annual 20F filing with the SEC, and it spells out a stark reality for the business. Right here, the company explicitly states that in their core markets, the barriers to entry are low. Competitors can launch a rival app with relatively few obstacles. We saw this when Uber entered the region, backed by massive capital, only to eventually retreat and sell their local operations to Grab. Today, Grab maintains undisputed category leadership across the region. They facilitate billions of dollars in transactions and serve over 50 million monthly transacting users. If the barriers to entry in ride-hailing and delivery are truly that low, Grab's market share should be highly vulnerable. But they protect their position through a 3-layered architectural defense. Mobility in Southeast Asia runs on millions of two-wheelers, weaving through unregulated, narrow alleyways. Standard Western GPS logic, built for cars and clearly marked streets, simply fails in this environment. When third-party maps proved too inaccurate to locate drivers and merchants effectively, Grab mapped the region themselves. They built Grab Maps, a proprietary routing infrastructure tailored to the specific physical realities of the region. They applied this same strategy to their supply chain. Grab acquired a majority stake in supermarket chains like Jaya Grocer in Malaysia, taking direct control over grocery fulfillment rather than relying entirely on third-party merchants. For restaurant deliveries, they established Grab Kitchens. These are centralized, physical food preparation facilities that provide merchant partners with optimized cooking spaces, forming the physical backbone of their delivery network. A new software startup can write an app with lower transaction fees, but that startup cannot magically summon accurate alleyway maps, centralized commercial kitchens, or a network of physical supermarkets. By embedding themselves into the region's physical infrastructure, Grab built an anti-scale defense. Global competitors trying to expand quickly through pure software find themselves blocked by these hard physical assets. This diagram from Grab's financial reports illustrates their second layer of defense, the super app flywheel. Ride-hailing, food delivery, and financial services all reinforce each other within a single application. On the supply side, a single driver partner can take a passenger to work in the morning and then immediately toggle over to deliver a lunch order. This maximizes driver utilization and earnings without Grab needing to acquire 2 separate fleets. On the demand side, 56% of Grab's user base now relies on 2 or more distinct services on the platform. When a consumer uses the same app for their daily commute, their groceries, and their digital wallet, they become deeply entrenched. This creates a massive capital efficiency advantage. Because these users are already locked into the ecosystem, Grab spends approximately 4 times less on promotions per ride in key markets compared to single-service competitors. Lower acquisition costs and higher retention rates allow the company to aggressively scale towards sustained profitability, all while maintaining their grip on the top market position. The digital flywheel integrates these theoretically open services into a unified, defensible ecosystem. The final layer is a proprietary data engine built on over 20 billion transactions. Grab feeds these multimodal signals, from hyperlocal mapping to in-store payments, into its own AI intelligence layer to optimize marketplace efficiency. This continuous flow of information allows their systems to constantly refine dynamic pricing and last-mile routing. That same transaction history feeds their financial services arm. Millions of people in Southeast Asia operate without formal credit histories. Grab uses their platform data to underwrite loans for these users based on their real-world purchasing and earning habits. They solidified this position by launching fully licensed digital banks, GXS Bank in Singapore and GX Bank in Malaysia, capturing the region's massive underserved population. A rival trying to enter the lending or logistics market from scratch lacks this historical context. Without the underlying transaction data, their risk models and routing algorithms are effectively blind. This closed-loop data system establishes Grab as the primary system of record for local commerce across the region. Generative AI poses a significant threat to traditional software companies, as it lowers the barrier to creating elegant code even further. However, Grab's management views these models as a high-velocity engine to scale their existing business. Because their AI-driven intelligence layer is built on proprietary data and a physical fulfillment network, it becomes calmer to disrupt, not easier. They succeeded precisely because they refused to rely entirely on code. They took on the friction of the real world, mapping unrecorded streets and building actual kitchens. In emerging markets, defensibility is won in the physical world. Grab dominates because they solved the chaotic, local realities that global technology giants were too scalable to touch.